The contagion effect of the Greek debt crisis has and will continue to impact global markets, including South Africa. Annabel Bishop, Group Economist at Investec, joins us now for more. So good to have you with us, Annabel. Hopefully you can provide a lot more perspective, because some people say that while Greece is so tiny and insignificant, it won't really have a significant knock-on effect on South Africa. Let's start with the three potential scenarios that you've highlighted in your release and delve into them individually, that Greece might even negotiate very proactively, and we might see a quick resolution to this matter?
Yes, so that I've given quite a low probability of about 20%, but I think, it's in its best interests to clearly try and make as much movement as it possibly can to reaching a bailout, because on the 20th of July it needs to pay money to the ECB. If it doesn't do that, technically the ECB can actually remove support. And of course this ELA facility that's being offered to Greek banks by the ECB, currently about 89 billion euros, would obviously then potentially need to be withdrawn. And that places Greece in a very difficult situation. They may actually have to start issuing internal liquidity instruments, the Cyprus administration, which in turn would be very much like an IOU, and that would be the first move in actually moving away from the euro. So that's a bad scenario for them. Brexit, which is our scenario 3, is not a good scenario.
Was briefly touched 12.50 against the US dollar, of course, and that's to do with US dollar strength against the euro. But that's the barometer of the risk-off trade, I think, when it comes to South Africa. This is the one we have to look at. If people are saying to themselves, well, this has been a muted reaction to the Greek situation, then it's starting to become less muted now, isn't it? And gosh, it looks vulnerable to me.
Yes, I think, that's really where our big risk's coming through for South Africa. It's translating through into the currency, really because our rand is very much a proxy for emerging markets, in turn a proxy for risk aversion, so that's obviously rising quite significantly. Also, South Africa is very open to global financial markets, and obviously negative risk aversion itself is obviously affecting them negatively. So we're seeing the currency weaken. I think the risk for us, if this gets worse, is that we could start to see some sell-off emerging market bonds as well, and that certainly would impact South Africa.
Wouldn't the US as well also play quite a significant influence in that regard?
Certainly, we've got quite a number of factors here. We've got what's going on in China, we've got the United States looking to lift off its interest rates, and of course obviously what's happening in Greece as well. So all of that's really impacting us in terms of our currency, because we are such a very open market to these global financial market moves.
Annabel, do you think it's naive of people to say that Greece is a nation of 10.5, 11 million people, 62.5% of which voted against austerity measures? Why should we worry about it? What I don't think people understand is the interconnectivity between Greece and the other Eurozone countries and people elsewhere. I mean, the debt that they have is 330 billion. I don't think what anyone's really explained is where that 330 billion is held and who is impacted should it not be paid back, which of course it won't be.
Yes, Germany is a big holder, as is Italy, Spain and France, also the ECB, the IMF. Of course, the worry certainly is because of the fact that Greece is part of the Eurozone. If it were to leave, if it wanted to obviously go through Brexit, then from that consequence there's really no rules governing how it's going to exit. And of course, having such a very large quantum of debt, as you said, would certainly become very much larger if they were to issue their own currency, which they'd clearly be required to do on exit, and that could see almost up to a 60% immediate devaluation. So that would, as I said, really push up this debt quantum, making it utterly impossible for them to repay it. And the worry certainly is that the Eurozone cannot offer them debt forgiveness, because if it does, then the other countries on the periphery, such as Italy, Spain, Ireland, Portugal, would then clearly also perhaps wish to follow that route. That would raise moral hazard, and the real concern certainly there is if those other periphery countries didn't want to go through austerity programs, repay their debt, it becomes a much bigger issue, and of course it threatens the actual unity of the Eurozone.
For the South African economy, are there potential lessons that we can learn from this crisis?
I think that's a very good question. Certainly for the South African economy, some of the problems that happened in Greece were that they really increased current expenditure of government enormously by paying a lot of money for increased size of the civil service, obviously social security, social welfare payments as well. That was unsustainable on the back of their true borrowing ability, sustainable borrowing, and also on the back of their revenue collection they were getting from their population. So, from that point of view, South Africa is certainly, and I do want to emphasize this, not likely to see, not likely to go through what Greece is going through in any immediate future. But obviously, the lesson for any country is that if you overextend yourself financially, and if you get to the point where possibly you could become bankrupt or insolvent, and certainly if you don't have anyone to provide rescue for you, which is what's happening, or what has happened for quite a while with Greece, and hopefully they will reach some resolution now, and they will stay in the Eurozone. But without a big brother to help you pay for your debts like Germany or the Eurogroup, then South Africa would be an extremely difficult situation. So I think the lesson is we need to keep a close watch on our expenditure and also on tripling the size of the private sector, corporate sector in South Africa, so we can engender much faster revenue growth in terms of government taxation. And of course that's something that was the problem in Greece, insufficient monies coming in from tax.
Sounds like it's all linked. Getting employment up, private sector participation, increase tax revenues. Long story, but it all makes sense in the end. Annabel, thank you so much for your time today. That was Annabel Bishop, Group Economist at Investec.